Right. So I had an absolute blast talking with Raymond Hightower. Ray has such an incredible story. He was a founder of a tech company. He got his real estate license, and now he is a full-time real estate investor focused on multifamily properties. Ray has an absolutely amazing video podcast called ROI Clear, which can be found at roiclear.com. This is such a great episode where you get to hear from Ray about the power of relationships, knowing your own deficiencies, and how he is creating a safe community for his residents to live in. Thank you so much for listening to the podcast. Feel free to reach out to me at charlie@hkigllc.com. Thank you for listening. Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. Thank you for tuning in today to Passive Investors Playbook. My name is Charlie Hardage. My guest today is Raymond Hightower. Ray is a tech company founder and a real estate investor. For over 20 years, Ray worked as the president and founder of his tech company. In 2016, his company was acquired and Ray launched Bridgetown Partners, where he is the founder and CEO. Bridgetown Partners specializes in apartment complexes ranging from 50 to 150 units in Arizona, Texas, and Tennessee. Ray is also the host of the ROI Clear podcast, where he has amazing guests. I should know since I was one of them. Just joking. ROI Clear is a phenomenal video podcast for business leaders. Ray, I love being on your show so much. I really loved our conversation and didn't want to deprive my audience of hearing from you. So thanks for being here and really looking forward to our conversation.
Charlie, thank you for having me here, and thank you for being one of our amazing guests.
Absolutely, man. And thanks for being one of my amazing guests. I loved your intro on your podcast. And I know after the show, we talked about that and we talked for several minutes and I was like, man, you got to come on mine. So excited to talk to you and ask the questions I want to ask instead of the questions that you made me answer. Right? But, no, hey, do you mind sharing with the audience? Do you mind sharing with the audience a little bit more about you, Ray?
Sure. Whenever someone asks me about my background, I just tell them very quickly. I started and ran a technology company for 21 years in Chicago. That was a ton of fun. Sold that company, and now I'm in commercial real estate. I lead a company called Bridgetown Partners, and we buy multifamily apartment properties, fix them up, and give people a great place to live. And we invite investors to participate alongside with us. Investors get capital preservation, tax advantages, and a solid return on investment.
Love that. Oh, you put that very eloquently. Ray, I love what you said about a great place to live, because obviously there's, a lot of people think about it. Yeah, it's an awesome, investment opportunity, right? And that's true. But if it's not a great place to live for the residents, you're not going to get that great return for investors. And so I love that you highlighted that. And not only did you highlight that, but you said that first. Yes, I truly believe it's a win-win-win. Residents have to win. We have to create a safe, nice place to live for them. Yes. Have to create a great environment for our the managers, the maintenance staff, but also we have to take care of the investors as well. Yes. And so when those three win, we all win, right? So love that you said that. Okay, so for 21 years, you're in Chicago. You had a tech company. You said you loved that, which is
Oh,
cool.
yes.
And I know you have like a computer science background.
Yes.
You sold that about 7 years ago. Were you looking to sell it, or was that just kind of someone came to you and said, "Ray, we need this"?
You know what? It's really funny. I started thinking about selling the company about 2 years before I actually did. And I was thinking, and really the motive for me was, people would ask me, why did you sell? We had gotten to the point where we had grown as far as I could take the company in terms of my growth. I'm very comfortable leading small dynamic teams. I'm not a big company kind of person. So at our largest, we had like 9 people on the team at Wisdom Group. The name of the company was Wisdom Group. So we were at the point where there were some things I wanted to do with technology that were beyond what I knew that I could do as a company. And I wanted to make sure I had great opportunities for the people who worked on our team. All of those came together, and it just made sense. So I went back and forth. It was a very emotional time for me.
Yeah.
I would say, I tell my brother's is a remarkable engineer and business leader and a very wise young man. And I'd call him up and say, hey, man, I'm thinking about selling the company. And then the next day I'd call him back and I'd say, hell no, I'm not selling the company. And Charlie, I went back and forth like that for 2 years.
Oh, man.
Because it was just emotional. Like the emotions, I didn't want, emotionally, I didn't want to let it go. But it was the better business decision. And so it was really cool is when I finally made the decision to sell it, I made a list of 8 companies that I would consider buying my company, because I didn't want to just sell it to anybody. I didn't want to just put it on the open market. There were certain companies, I had gotten to know CEOs of many other tech companies in and around the space. We were software developers. We started off as network engineers and we morphed into software development. And I chose them and I sent a 3-sentence email to the CEOs of those companies because I had gotten to know them in 20 years or whatever. Some of their companies were younger than mine, but I had gotten to know them over the years through networking. I like networking, and it's something that that I do effectively. And so I sent an email out to them that said, I'm doing something interesting with my company. You might benefit from what I'm doing. Can we meet in the next 48 hours? No, I said, when can we meet in the next 48 hours? So that's a 3-sentence email I sent out on a Wednesday. Within 4 hours of sending that email, I had 7 appointments. Not 7 responses, but 7 back and forth, 7 appointments. The 8th CEO called me back a week later and said, hey, Ray, I see you want to do something with your company. What's up? And I said, well, I'm glad you called me back. Last week, my company was on the market. I had a handshake deal that week. Oh, wow. with the people that I eventually sold to. And it was good. And what it told me is that there's a lot of value in building relationships with people. There's a lot of value in saying what you're going to do, doing what you said you're going to do, and then delivering on your word. That really comes down to that. We had a handshake deal. We did that. And I was very happy to go with the company that I went with, great company. They're doing well. And yeah, that's how it worked out. But I didn't start off thinking I was going to do it, but a lot of it was driven by I wanted to give the best possible opportunities to the people on my team. And there were some things that I wanted to do as a technologist that I knew I wasn't able to do just at the size where we were. So there we go.
Man, that's really cool. I think for several reasons. Number one, you know that you're good. You're a very, very good leader with small dynamic companies. Yes. And you knew that there was so much more that you wanted to do, but you weren't the right person to do it. So instead of fumbling away, you said, hey, look, I want to have I want to give the best opportunities, not only for the company, but also for your employees to grow and expand. And so I love that you kind of wrote down a list of 8 companies and had 7 appointments within the day. That's pretty awesome.
Yes.
And then it goes to show the value, and you said that there's a ton of value in relationships, and that's so true. And not at all to get on the real estate side, but the fact that in the real estate team, they're not these huge teams, right? It's typically a
Right.
team, a
Yes.
smaller team with a larger amount of investors, but the team to properly manage that asset, the multi-million-dollar asset, you need to be you need to be able to communicate, collaborate with a small team. So I think that helps you in the real estate side. And then also the value of, relationships is such a key in real estate more than other businesses, I think. And so that just shows, that's just another reason why I think you're so good in real estate, because the relationship piece. So, okay, so you sold your business in 2016. You have a computer science background. Did you take any real estate classes in your program?
Man, oh, you're taking me back. All right. Many years ago, when I was working in corporate America, I worked for a couple of Fortune 500 companies in my 20s. And while I was with my last Fortune 500 company, I was 25 years old. I decided I wanted to become a commercial real estate broker. So I took the courses to become licensed. I was a licensed real estate agent in the state of Illinois. And then the state of Illinois at the time, I don't know if they still do it this way, but at the time, after you've been an agent for at least 1 year, you're eligible to take the broker's exam. And so I took my broker's exam 1 year and 1 day after I got my salesperson's license, I don't know if they call it salesperson or agent. I forget. This was decades ago. This is before I started my tech company, right? So yeah, I was a commercial real estate broker for a few years before I started my tech company. Charlie, I got, as my father used to say, I got my head whooped. I got my head whooped. And, like you said, my father used to say sometimes, don't go in that neighborhood because you're going to get your head whooped. So I'm just having flashbacks of my father because I learned a lot from him over the years. But I'll say, and my brother, who's extremely wise, says about that experience. I was in there and I did a lot of random deals. I did industrial property, vacant land, apartments, retail, office, all kinds of random deals, and one single family house, but a whole lot of random commercial deals in one single family house. And it was an incredible experience. I learned a lot. I trained with a lot of people. I didn't make enough money to stay in that business. So I started looking around and I eventually started Wisdom Group, my tech company, off of that experience. But, that's the kind of experience my brother, who's extremely wise, likes to say, that's the kind of experience you would not trade for $1 million, but you wouldn't repeat it again for 2.
Yeah. That's awesome.
So that's the way I look at that. But even today, there's stuff that I learned, like in writing. You're not supposed to write contracts as a real estate broker or agent, whatever. I hope the statute of limitations is gone, because I may have stepped out of line somewhere, right? But you're allowed to fill in the blanks or whatever. But essentially, I would draft, whatever contracts and run them by the lawyer and let the lawyer take credit for my work. I don't care. I need to get the deal done, right? And so, but it was a lot of fun and I learned a lot, but there's some differences between what I did back then and what I'm doing right now. There, I was a broker. Now I'm an owner. Yeah. There, I was very much doing a lot of stuff on my own. I'd collaborate with people here and there, but not really collaborate. I did not collaborate very well. Now I collaborate very well with a bunch of people, in Tennessee near you. I mentioned, some of the people in Tennessee that I collaborate with, the Adams twins, Jim and Madison Adams, and, one of their colleagues, Jorge Moscoso, and then Erica Gunnison is collaborating with us on work we're doing in Tennessee. And then here in Arizona, Adrian Diaz and the Shermans, Trevor and Shannon Sherman. I can go down the list. Kobe Fryer, lots of people we're collaborating with here, and in Texas. There's people, Arizona, Tennessee, and Texas where we're operating. And there's no way I could operate in 3 states the way I am now without collaborating with people who are already there and already have boots on the ground, so that we can leverage each other's strengths and fill in for each other's weaknesses. So yeah, I forget the question that you asked. I hope I answered it somewhere in there.
I think I asked you. I think I asked how the weather was. No, no. I had mentioned that you probably didn't take any real estate courses in computer science school, but
Yeah.
You mentioned that you were a commercial broker, did some bunch of random deals in one single family property, which is pretty funny to me.
Yeah.
Is that how you got into real estate as a just in general real estate through
That
being a
is,
broker?
yeah, that's
Okay.
how I got into it. And really, like before I left corporate America and went into real estate, I was in this is a wild story. I was in Hawaii with a bunch of my friends. I was 24 years old. This is like a few weeks before my 25th birthday. So it was March. My birthday is at the end of the month, and this is in early March, and we were hanging around in Hawaii and trying to be grown. And my only gripe about that trip is I was not able to rent a Ferrari because I wasn't yet 25. You had to be at least 25 to rent an exotic car, and I was 24. I said, but I'm only 3 weeks away. I said, well, come back in 3 weeks is what I said, right? That was hilarious. So, but I noticed, there were a lot of people driving around, and there's Rolls Royces or Porsches, whatever, exotic cars, what have you. And the people that I talked to were in real estate. I said, oh, that's interesting. Maybe I'll do something in real estate. And I was old enough at 25 to think I knew everything.
Yeah. Me too, actually.
Yeah. There you go. Are you 25 right now? So there you go.
Yeah, sure. Last year. Yeah.
There you go. So there you go. So, and then when I came back to the mainland, I immediately enrolled in those brokerage courses that I told you about and left corporate America. Everybody thought I was crazy, and I was. I wasn't so much crazy as I was. I had an inflated view of my own capabilities. I didn't realize the level to which it's important to rely on other people and collaborate with other people whenever you want to do something big. Yeah. I thought that. Yeah, I didn't get that, but I see things differently now. And when I look at the success that our teams in Arizona, Tennessee, and Texas, the success that we have enjoyed, it is because of the way we collaborated with each other. You mentioned earlier, Tommy Brandt. Tommy Brandt is amazing, and I met Tommy from his Nashville multifamily meetup, so yeah, anyway.
Yeah, I had him on my podcast. He was actually one of the, I think he was guest like 4 or 5. So,
oh yeah, yes.
Which it's so funny because I was on a networking call a year and a half ago, and guy said, "Oh, I got a deal in Nashville." I was like, "Oh, I need to reach out to this guy," and come to find out, we live like 10 minutes away.
Oh,
so
wow!
It was like people all over, actually people from Hawaii, from New York, and all over the place, and. Like, oh, this guy's literally right down the road. So anyway, Tommy's a great guy. So you got into real estate by knowing everything in the world at 25, going to Hawaii, not being upset you couldn't rent a fancy car. But realizing that people who had the fancy cars, a lot of them were in real estate. So you went back, said, I'm going to get my license and go from there. But it wasn't what you thought it would be for probably a lot of reasons. When did you, fast forwarding a little bit, when did you understand, hey, I want to invest in real estate? I don't want to be a broker. I want to be an owner.
I knew that I wanted to invest. I thought the way to become an investor was to become a broker first.
Okay.
And I got some advice from somebody who was an owner who said, oh yeah, go into brokerage or whatever, that's a good way to get in or whatever. But in hindsight, I could have done a better job of talking to more owners and more people that were in a position where I wanted to be.
Yeah.
I didn't seek out a sufficient amount of advice. I got a bit of advice that resonated with something that I knew, and I said, okay, boom, I'm going to jump and do it. So the advantage of jumping and doing it is that I ended up with decades of entrepreneurial experience that I would not have had otherwise. I might have ended up in corporate America for 20 years, right? Ooh. And so there's pluses and minuses there. I know people who've been in corporate America for decades and they've done all right. So they're doing okay. That was not necessarily a good fit for me. I've had just a blast doing the things that I've done in, the entrepreneurial ventures I've done, with the technology companies, owning, the one that I started, or owning a piece of the one that I sold to, or owning the real estate companies that I have right now, and owning the properties that I own right now. That's just a blast. The people you get to work with, you people get to collaborate with. And I think the one big difference is I have a bigger appreciation for people now that I didn't have back there. I respected people, but I have a deeper respect and a deeper appreciation for people now that I didn't have decades ago when I was, first in brokerage.
I have a theory about that. And I've said this on my show several times, but when people hear about the power of real estate, how the everyday person can invest in it, I think that just changes a lot of mindsets to go from me to, oh my gosh, let's help each other. Like, I want to share this with anyone I can, because in the corporate world, I have a great idea. I tell someone, they might take it, right? Or whatever. And here, I have a great idea. It's like, okay, let's get Charlie on the team, or let's get Ray on the team, because they can add so much value. And it's so much more about a team mentality, like we've talked about before, small dynamic teams, that are in it for the same thing, right? So Ray, I'm going to put words in your mouth here. Maybe I'm right, maybe I'm not. But
you're like a journalist. Do you work for the? Well, I won't name any papers, but anyway.
Are papers still around? No.
Right.
So
right.
Why? Well, it sounds like to me maybe you got into real estate initially because you wanted the cars and you saw the dollar signs. And if you're not watching, he gave me a thumbs up while he was drinking, but sounds like you were
while I was drinking water. Specify.
Water. Yes, water. Why are you winking at me, Ray? Oh no. So you got into real estate because you saw the dollar signs, you saw the cars and stuff like that. But why, like, now looking at not 25-year-old Ray who knows everything, and looking at Ray who knows just a teeny tiny bit about the world, which I'm there too, by the way. But like, what is it about real estate that has kept you, in real estate for so long?
Oh, wow. You know what blows my mind, I can answer that by telling you a story about the first GP deal that we did here in Arizona. And this has happened with other properties that we own, but it really stood out for me in this instance. On the day that we closed on this multifamily property and multiple units, multiple buildings, all this stuff, our professional managers, the management company that we hired to manage the day-to-day for the property, was on site on the day we closed, knocking on doors, handing out flyers saying, here's where your rent needs to be paid now, and all that jazz, what you expect. But what they also did is they had porters on site picking up trash on the property. This was a property that was poorly maintained by the previous owner. And when our team went on site and picked up all the trash and put in the dumpster and did all of this stuff, the residents thanked them.
It's sad, but that makes you feel happy in this fulfillment that why would I don't want to talk bad about any ownership group, but I do think that's why some investors have bad reputations, because it is a slum, right? But I love, again, going back to one of the very first things you said was you create great places to live. Right?
Yes,
and that's what you go for. And sometimes all it is picking up trash.
Yeah, it's picking up trash because it made such a difference there because during our due diligence, and for those who don't know, due diligence is where you look very, very closely at everything in the property to figure out how much money it's going to cost you to improve it and all that. And it's a very serious time. We walked through every unit on the property, and what was very apparent is that every resident cared about their individual unit.
Yep.
You could see it in the pictures they had on the walls, or the artwork they had around, or the sculptures, whatever. You could see the love that they put into their individual units, because these are their homes. When we're doing due diligence and walking into what we call units, which are a cell on a spreadsheet, every cell on that spreadsheet is somebody's home.
I love that.
And we walk through with respect, and we make it clear, yes, we're buying the property, we're reviewing everything that needs to be done so that we can repair anything that needs to be repaired, so that we can give you the best possible service here on site. So it's just the idea that we're providing homes for people. They're providing us money so that we can turn around and invest and buy more properties where we can make improvements. I love that. You know, I could tell you other stories about other properties that we've improved in other parts of Arizona, where, you know, next week we're flying to Texas on another property that we just put under contract this morning.
Congrats.
Oh, that's
awesome.
so good. Put another deal under contract this morning. And then we have other deals in different states of negotiation, letter of intent, purchase and sale agreement, negotiation, all that stuff. Here in Arizona, Tennessee, and Texas, we're doing all of that. And yeah.
Love that. Yeah, I think, you know, you said that, I said, why is real estate so attractive after all these years? And I love your answer of basically one word: fulfillment, like the satisfaction. Mm-hmm. That's two words, but you know, it just being able to help people. I love that you said we see it as a sell on the sheet. Doesn't mean we treat them that way, but we see it as a sell on the sheet. But it is their home. And oftentimes in a poorly managed property, which a lot of times is what we buy, then, you know, it's their home, but it's not their community. And we want to turn it into their home and their community. Oh,
that is really well said. I'm totally going to steal that. Anyway, go ahead. Please continue.
Sorry, man. It's trademarked, but no, but I mean, you said it. I'm just summing it up. But you know, that is true, because we are in it to make money, but we also get fulfillment and satisfaction out of this. Yes. Every general partner, every investor that I talk to that I would ever do business with is in that same mindset of, we want to make money for sure. Yeah. But we're not going to make money if we just raise rents. People are going to leave. Right? We have to improve the community. So, man, I love that thank you so much for sharing that story. I mean, as silly as it sounds, as simple as it sounds, picking up trash and then residents thank them. It's like, okay, this is too easy, you know, and it's not.
Thank you for doing your job. It's your job to keep this clean.
Exactly. And it's not that easy. There's other stuff that goes on to it, but that goes a very long way, especially as a very first impression.
Yes.
So what, I'd love to ask you how you came up with capital for your first investments.
Oh, wow. Relationships with people that I knew, relationships with people that I met, Zoom calls, phone calls. Had we done, were we doing in-face meetings then? I'm trying to remember. It was during COVID was still happening. Okay. And I'm trying to remember if I'd have to look at my vaccination card to figure out if we actually were doing vaccines yet. Yeah, we had started to do the vaccine, right? I do remember we had started to do the vaccine. So, but really talking to a lot of people and finding people who are predisposed to invest in commercial real estate first. I've never had an investor who was just brand new to investing or brand new to anything. They've invested in something before, right? I'm just thinking about the investors. So everyone has had invested in something before. And I noticed that while they're evaluating the property, they're also evaluating me.
Yeah.
They want to know what I've done, what kind of obstacles I've gone through, what kind of obstacles I've dealt with, how I've dealt with them. Because in any business, you're going to uncover some unpleasantness at some point or another. That's life. And if it was all easy street, everybody would be doing it.
Right.
You know, so it's really relationships and talking to people. You know, you got to have the investor portal. You got to have the private placement memorandum. You have to have the articles of organization for your LLC. You got to have the SEC attorney and your transactional attorney who put all those documents together and all that jazz. But it really comes down to, do they trust you? And do they know that when you give your word that you're going to deliver on these numbers, these investment predictions, these investment projections, are you really going to deliver?
Yeah, I love that. And I think for whether you've invested before or invested in real estate or invested with you, it's still very important that they are they know you and they trust you and they like you, because at the end of the day, it's their hard-earned money that they've worked really, really hard for.
Yes.
Or at least at some point they worked hard. Maybe they're just serial investors now, but
Right.
at one point they worked really hard for it. And I think, treating their money as your money, and I actually treat my investors' money. I hold that to a higher standard than I do with mine
Oh, yeah.
personally.
Yes. Yeah.
Right.
Yeah.
And so, I like what you said. We all do for pitch decks and webinars beforehand. We always have these projections, and those are done. We get CoStar data or some other like third-party professional data and underwrite it. But Ray, I know you're definitely the type of person that if any of your investors reach out and say, Ray, this doesn't make sense, you're the type of person that's like, okay, let's jump on a call. Let's go through this. And I think, in your podcast and now here and just our conversation before and after, you're obviously very trustworthy and know your limitations. And that's why you don't do this by yourself. You have partners that, if you don't know an answer, you're able to say, hey, help me out here. And which is great, because I feel like if one of my investors asks me a question and I don't know in corporate or in my sales job, it's like, great, I lost that. Right. But now it's like, look, I don't know, but we have a whole team. It's not just me. Yeah. And I think, you keep harping on team. And I think that's such a benefit for passive investors that, look, I don't just get Ray, I get the team.
Right.
Maybe everything kind of runs through you, and that's fine, but you're able to get so many more superpowers, from your teammates. So, I love your answer there. Just, talking about real estate and getting the word out. I just think so many people don't know about it still, even though, I talk about it all the time. I know you do too, but, there's still a lot of people out there that would love to be involved in this, but have never heard about it before.
Right.
So what would you say over the next 9 to 12 months are your company goals?
Our goals are to do more in the 3 states that I just mentioned to you. Right now, everything that we own is physically in Arizona.
Okay.
We have done many offers in Tennessee and Texas, the other states that we're targeting. We have not acquired yet. Like I said, we just just had an LOI accepted in Texas this morning. We've gone through the same process in Tennessee. And we're still going through that. So you said 9 to 12 months. I would like to have acquisitions in both of those states. The part of Texas I'm especially interested in is Brownsville. Boca Chica, because in Boca Chica, there's a rocket company called SpaceX down there, and they employ high-paid engineers, high-paid technicians, all the support people who support their mission that they're doing there. It's very exciting. And as you know, as multifamily investors, we go to geographic locations where there is job growth, income growth, and population growth. Job growth, income growth, and population growth. And I really see that booming down there in that part of Texas. And in Tennessee, we're in Nashville and in the surrounding suburbs there. We've looked in Clarksville. We've looked in some of the other suburbs that are there. Murfreesboro. We've looked in. There's Lebanon. There's a bunch of that because you're there in that MSA also. And then so that's what we're doing. So in the next 9 to 12 months, I would like to have closed acquisitions in Texas and in Tennessee, and we're working on that right now.
Yeah, and possibly by the time this airs, that Texas deal will be closed. So we'll have to edit that out. But no, not really. But man,
let's find out. Yeah. Do what you do. But the fact is, with all of these deals, honestly, and real talk here, just because we're under contract and we're moving forward, and now we're in the due diligence period. If we find something during due diligence that is not in the best interest of our investors, we will pull out.
Yeah.
We only move forward with the deal. That's the purpose of the contract. Okay, we got the contract. And if everything is as the the seller represented and the broker represented, and it has been represented to us, yeah, we can move forward. And sometimes something happens that is out of their control or whatever, like if something happened where the property was damaged somehow before we took possession, of course, we're not going to move forward with it, right? Or anything like that, right?
Yeah.
But once we're under contract, really through the whole process, it's very, very important for us to do, and you do this also, I know you do this also, but this is for the listeners, for us to conduct our due diligence in such a way that we would be proud and happy and comfortable for our investors to be looking over our shoulder while we're doing it.
Yeah. I love that. And for the audience, due diligence, I know Ray touched on it a little bit earlier, but I mean, without actually ripping stuff apart, you're ripping up the apartment, right? You're going through all the leases, you're going through the financials. Yeah. We're looking at the interior of buildings, exterior of buildings, just like so much of the property. And so we're not just buying a deal and, hey, it works on paper and we close on it. That has nothing to do with it, because again, we're not talking $10 here, potentially talking tens or dozens of millions of dollars for these properties. Right. So we have teams that help us. It's not just like Ray doing it with his team. There's probably 15, 20 people that kind of do different pieces of that. So just wanted to talk a little bit more about due diligence, because you mentioned it towards the middle of the conversation and then just brought it up. And so I love that you pointed out too, if something doesn't look good, and maybe that's something, a storm or something hit the property, you can back out. Maybe you lose money, maybe you don't, but that the investors don't lose money there, right?
Yes, that's our LPs do not. Yeah, we're taking that risk and yes, right.
So so exactly. So when you invest with Ray and his team, it's like, this is already, we vetted everything. Now as a limited partner, you're still getting all the benefits of real estate with such a minimal risk, right? Hardly any risk there. So
yeah, it's beautiful. Minimal risk, minimal time commitment, on their part.
Yeah.
And if they want to learn more about what we're doing, we'll absolutely talk with them as much as they want, because, you and I and our colleagues, we love to talk about this stuff, right?
Yeah.
But, minimal time and minimal risk. I think you put that well. Yeah.
So Ray, I know we have a few minutes left. I want to ask you about a recent book that you've read that really stands out or listened to. I know you.
Oh, yeah. I do. I do audible books. I almost said books on tape, but I'd be dating myself, but audible books. And books. 10x is easier than 2x. And if you go to my blog at rayhightower.com, for the books that I really like, I tend to write a, one-page summary of them. So if you go to rayhightower.com, you'll find there, you can do a search on that and you'll find 10x is easier than 2x there. And there's just a one-page summary there. I love it. And it's one of, if you ask me about books, 3 of the books that I would recommend that I'm really excited about were written by this same duo, Dan Sullivan and Dr. Benjamin Hardy. And Benjamin Hardy is a psychologist, a PhD psychologist, remarkable guy who has studied how entrepreneurs deliver results, how business leaders deliver results. And Dan Sullivan is a coach to entrepreneurs, has been doing that for decades. And in their collaboration, you have, Dan's experience, Ben's experience, Ben's academic experience and Dan's business experience, and it blends together in such a remarkable way. In multiple books. 10x is easier than 2x. That's their latest book together. And 2 earlier books are The Gap in the Game and Who Not How. And I could do quick summaries of all of those off the top of my head, but I wrote about all of them on my blog at rayhightower.com.
Okay, awesome. Yeah, 10x is easier than 2x. I've not read that. I've not read The Gap in the Game. Both of those have been recommended to me, but I have read Who Not How. So
yes.
Love. I never actually put it together that it was the same 2 people for all 3 books until right now. So thank you for that. But yeah, no, Who Not How is great.
Oh, yes.
And the other 2 I'll definitely check out. I know I kind of asked you this over the next 12 months, but what do you think people can expect to see from you and your company over the next 5 years or so? Anything change?
Yeah, there's some things. Well, our company is set up, our business plan really has 3 layers. There's the commercial real estate layer, the software development layer, and the community service layer.
Cool.
Commercial real estate, software development, community service. And here's why. Commercial real estate, what we're doing with multifamily investment, that produces steady, reliable, predictable cash flow. Commercial real estate is not a get-rich-quick business. It's a get wealthy over time. If you execute, if you're disciplined, and if you serve your residents and your investors well, you can get wealthy over time. But it takes discipline over time, and you have to serve people well, and you have to interact with people well, build teams, and make that happen. So that's what we're doing with commercial real estate. Software development, because I ran a tech company for a couple of decades, and there's still things that I want to do with software. One challenge with software development is that you can be building your software out and get to the point where you haven't created something that offers sufficient value to the customer, and you're out of money.
Mm-hmm.
Then you have to go back out and do consulting. And we were in that situation multiple times when I ran my tech company, not only on products that we worked on, but on products we worked on for other people. And talk to any software consultant, they'll tell you that story. I was just on a Zoom call with another software developer an hour ago, 90 minutes ago, and we were talking about that, and same thing. So the commercial real estate provides that steady, reliable, predictable cash flow, so the software development will work well. Then there's community service. And with community service, that's a very big deal to me. I'm very active in the Boy Scouts of America. That's my primary vehicle for community service. Yes, I'm active in my church, but the way I give back is through Boy Scouts of America. You know, I'm teaching young men between 11 and 18 how to budget time and how to budget money, and those are the kinds of things. Those are the areas where I focus. And there are other adult leaders who focus in other areas. But also ROI Clear podcast is an act of community service in this respect. I believe in capitalism. I believe that capitalism is a highly effective way to get people to work together. Capitalism is about people cooperating to achieve things that neither of them or none of them could have achieved as individuals. And when we really understand capitalism, when we really understand business, we will do business together. We will cooperate with each other through capitalistic means, and we're less likely to fight with each other and clash with each other or drop bombs on each other or whatever. Yeah. So that's what ROI Clear is about. So over the next 5 years, you'll see more of all of that. That's my plan right there. You'll see all of that unfolding, and you see much of it unfolding right now. You'll just see it. If we have done the foundation and the basement of the high rise right now, you'll see more levels of that high rise constructed, and perhaps a few adjacent high rises as well.
Love that. Very cool. What would be the best way for people to reach out to you, Ray?
Oh, great. You can go to roiclear.com. That's our podcast. All of our sites, roiclear.com, rayhightower.com, bridgetownpartners.com, they all link to each other, and all of them end up sending messages to my email address if you reach out via the Contact Us page on any of those. And if you go to my blog at rayhightower.com, you'll read more about our ventures and our books and all of that.
Awesome. All right. So bridgetownpartners.com, roiclear.com, rayhightower.com.
Yes, sir.
We'll put those in the show notes. I want to link your pod. I know roiclear.com links to the podcast. I'll put the link in the show notes as well. I know you're on LinkedIn. Lost the name there, but cool. And so we'll make sure that that's in the show notes as well. Yeah.
My LinkedIn link, if you go to rayhightower.com, links to my LinkedIn, Twitter, Instagram, Facebook, Rumble, YouTube, all of those are there too.
Awesome. Man, Ray, I'm glad that you were willing to come on the show. You have such a big podcast. I didn't know if you would stoop down to the little guy. So thank you so much for being here, man. But seriously, thank you so much, man. It's been awesome talking to you, and
thank you.
Forcing you to answer my questions, because you did that to me.
Let go of my arm. You're twisting my arm. Let go.
But thanks, Ray.
Thank you, Charlie. Thank you so much. It's been a pleasure.
Thank you. Bye. Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing.
Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.